Welcome to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Here's your host, Grant Bledsoe.
Hello, everybody. Grant Bledsoe here. Welcome back to Grow Money Business. This week on the show, we're talking about Bitcoin and whether it's a reasonable time to jump back into it. If you've been paying attention, Bitcoin is down about 60% year over year after last year's turbulence in the markets and Sam Bankman-Fried and FTX's evolving fraud scheme where billions of dollars of customer money has been lost. So a lot of confidence in cryptocurrency in general has been lost recently, and it may be a reasonable time to jump back into it as a long-term investment. So today on the show, we cover whether it's a good idea, we cover what situation would be a good idea to jump into, and the current state of El Salvador, which, as you may recall, decided to start accepting Bitcoin as its legal currency, legal tender here about a year ago. So that's what we cover on the show today, and I hope you enjoy it. Hey everyone, I need to interject quickly to remind you all that nothing found in today's episode or any other episode of Grow Money Business should be considered financial, investing, legal, tax, fitness, or even relationship advice. It's content that you're free to use and to deploy on your own terms. And before taking any actions on content found on the show, please do consult with your tax professional, your attorney, or your financial planner. If you don't have a financial planner, head on over to threeoakswealth.com to learn more about what we do in terms of financial planning and investments and how we help clients on an ongoing basis. So it's time to check in on how Bitcoin and other cryptocurrencies are doing. If you've been paying attention, obviously, last year, crypto really fell off the cliff in general, including Bitcoin and Ethereum and all the other major coins, the lesser known coins out there, the stuff that trades at like a tenth of a penny per coin, performed much worse than that. And if you've been paying attention in the last couple months, they're all starting to rebound a little bit. So it's been a while since we've talked about this on the show, and there are a couple interesting things going on that have people wondering whether now is a good time to jump into this stuff, because the long-term investment thesis hasn't really changed. The technology hasn't changed at all. Yeah, we've had a whole lot of fraud. We have a pending legal proceeding for Sam Bankman-Fried, and some other speculation about whether that whole debacle is going to drag down other exchanges. We've had some other defaults since the whole Sam Bankman-Fried stuff started to unfold. And amid all that, throughout all that, Bitcoin has really bottomed out and started to climb back. I think the bottom was somewhere around $16,000 a coin. Last time I checked, as I sit here recording this, it's more like $24,000 a coin, something around there. So Bitcoin and Ether have both; those are the two most predominant coins out there. You have all these other crypto people like to call them projects, but coins that you can purchase through any of these exchanges, really. So the question is now a good time to get back into this stuff? If you do, what should you buy? And what's the long-term outlook on all this now that we've really, as an investment community, started to uncover a fair amount of fraud? How should we think about this stuff? So a couple observations to start. Number one, the long-term benefits, the value, the disruptive potential that this stuff has not changed in the least. The core benefit that this technology, I guess is probably the best thing to call it, offers is that it is a far more effective way to transact than our current financial system. And we've talked about this before, but just to refresh everybody's memory, the current banking system is just based on all these layers and layers and layers and layers of history and complex systems interacting with each other. And so a simple example, let's say that you have a sibling who lives in France, and that sibling has come on hard times. you have $10,000 in a bank account here in the United States, and you want to help out your brother who's in France, and you want to send $10,000 over to them so that they can use it. You're probably not going to walk into the bank, get $10,000 in cash, put it in a briefcase, and then jump on a flight to Paris, unless you maybe obtained that $10,000 by doing some super illegal stuff. But if that's the case, you probably don't want to take it out of the banking system anyway. So that aside, usually what you would do is figure out a way to wire the funds over to your brother who's in France somewhere. And your bank is going to use the international payment system to get the $10,000 from your bank account to your brother's bank account in France. And then there's the question of, well, are they going to receive US dollars? Are you going to convert that to euros or maybe some other currency for whatever reason? And your bank has to talk to the other bank, and they have to interact through this established banking network that's costly and inefficient because of all those decades and decades and layers of history that our banking system has throughout our entire capital network. So a more effective way to do it would be to send them Bitcoin, because any Bitcoin transaction, it doesn't rely on that banking network whatsoever. It relies on the general ledger, which is a whole bunch of computers doing what's called proof of work. You're sending it to your brother. It's basically publicized to all that network of computers and is public knowledge, and you're not relying on any third parties. It's a direct transaction. Then your brother can take the 10,000 worth of Bitcoin and then exchange them for euros or US dollars or do whatever they want for them, whatever they want with them. So this is clearly and has always been excuse me, a more effective, a more efficient way to transact throughout the world's banking system. That hasn't changed. And the question has always been, well, what are we comparing Bitcoin to? We're comparing it to fiat currency. We're comparing it to a legacy system that, yeah, it may not be the most effective, but the world has a lot of trust in it. And fiat currencies like the US dollar are all based on trust and expectation of store of value. So what I mean by that is 100 years ago, you used to be able to exchange US dollars for gold directly. There was a gold standard that backed US dollars. We left that system. And so now US dollars are not backed by any physical material. They're just US dollars. But they work because the rest of the world believes in the US economy. They believe in US dollars. US dollars are valuable to them. They can use US dollars to buy and sell and transact in the goods and services that they want. So that this system works because the world is comfortable with it. The world's not comfortable with some brand new uh, technological some computer coin basically that's created out of thin air. It takes a long time for people to get there. And so the question has always been, is the value that this more efficient way of operating enough to give the world enough confidence to truly leave that fiat currency system, or is it, or at least enough to give it a lot of momentum? I think the answer is yes. We do have a lot of momentum here, but we've hit some head roads. And as I describe it, I sound like a crypto fanboy. I am not at all. I don't own any. I'm kind of interested in buying a little bit just to understand it a little better. Um, but the point I'm trying to make is that right now, Bitcoin and other cryptocurrencies have enough of a foothold to where they've captured the world's attention. They have some momentum, but they've hit some speed bumps with um, these frauds that have come up from Sam Bankman-Fried and a couple of others that are starting to pop up. So At any rate, the core investment hypothesis, the core value that this thing brings to society has not changed at all. The question is, how should it be regulated in a way that protects consumers, protects investors, and prevents these outright frauds that we're starting to peel back the layers on now. None of that's none of the core stuff has changed. So is this a good time to jump into it? It's not a bad time to jump into it, I think, but I'm also pretty confident that we're going to have a lot more of these fraud stories where people lose their shirt thinking that they have a safe account at one of these quote unquote crypto institutions that turns out that the money just disappeared. And so we've got some regulatory stuff that needs to happen here, and I'm pretty confident that legislators and the SEC and our de facto government organizations that regulate this stuff are going to put their heads together and come up with a reasonable framework for protecting consumers. Because crypto at this point is not going away. I don't think Bitcoin or Ether are going away. I still think that 99% of the coins out there, these smaller ones that are very inexpensive to buy, if you pull up coindesk.com or any of those online tracking websites, the vast majority of those coins are probably going to go to zero. I think you'll probably have a few that uh, maintain the lion's share of transaction volume and interest across the world. But now's not a bad time to to get into this stuff because Bitcoin's still down like 60% year over year. Now that being said, I think you need to do it very safely. We have this issue of fraud, and the Sam Bankman-Fried thing is so I did an episode on this a couple of maybe a month or two ago. It's so ridiculous to me that these things are not regulated as other financial institutions are. Banks, brokerage firms, other ordinary, more traditional financial organizations have to go through all sorts of checks and balances, and they have to pass capital adequacy tests. So they have to have enough cash on their balance sheets so that you don't have a run on the bank where all the customers that have deposits want their money back all at once, and the bank doesn't have the mechanism, doesn't have enough cash on hand to repay them. That's exactly what happened here with Sam Bankman-Fried's organization. So you need regulatory standards to make sure that that doesn't happen and the money doesn't just disappear. So if we have any sort of function in our political system, which might be a little bit of a stretch, we will have some regulations coming down on these crypto firms where you can open an account and buy Bitcoin and anything else that will protect consumers a little bit better. And this is where the FDIC comes into play for banks, and the SIPC, which is the brokerage equivalent of that. Yeah, they have to do all these things and buy insurance to be part of those systems, but those are the systems that protect investors and make people feel okay about putting their money with a bank or a brokerage firm. And crypto firms, I feel like, ought to be regulated in the exact same way. So we have a long ways to come. Timing wise, maybe it's a year or two off yet. I think they're probably going to want some more clarity surrounding how the investigation um, with Sam Bankman-Fried goes, and hopefully they're able to recover some more money to give back to investors. That being said, if you do choose to get into the stuff now, I think you probably want to make your purchase. Let's say that you're buying Bitcoin. I think you want to make your purchase, and then you probably want to take that offline and do some kind of what's called cold storage. Now, if I knew exactly how to do that, I would describe it to you, but I don't. Basically, your Bitcoin is just some big string of computer code, as you may know. And what a crypto brokerage firm is doing, or crypto institution, you log on, you create an account, you deposit money into that account, and then you use it to buy cryptocurrency. Their storing that long string of code on your behalf, and it's supposed to be secure. But you always have the opportunity to take your crypto off of that platform and store it on a hard drive that's not connected to the internet in a safe in your closet. You can do the same thing with stocks, by the way. If you want to hold, I believe you can. They'll probably charge you a fee for it. But when you open an account at Vanguard and buy shares of Google, those shares are held in what's called street name. And so the actual shares of Google are held by Vanguard. Vanguard's keeping track of all its customers and who owns what. Again, they have all sorts of regulations surrounding what they have to do to maintain those records and all the accounting of what goes in and what comes out of the accounts and all that. It's very standardized and it's very regulated. But the actual shares are held in Vanguard's name, and they're earmarking a couple for you through your account with them. I believe you can request those shares from street name and pay a fee to have them transferred. You may have to try to talk to what's called a transfer agent about it. But essentially, with crypto, I think that's what you want to do right now. I don't think you want to rely on any of these institutions to do what they say they are and hold enough assets and enough cash on their balance sheet to be able to satisfy your redemption request in the future. Because we've just started to peel back the layers on this stuff, and because they don't have any apparently they don't have any requirements for keeping cash on the balance sheet, or if they do, nobody was looking at it. I don't think you want to take that risk right now. And so what it takes is you log into one of these places. Coinbase, is an example. Kraken is another one. You open an account, you deposit cash, you make your purchase, and then you take that string of code off of the account and store it yourself. Put it on a hard drive. Don't connect it to the internet to be really safe. And that string of code, that removable hard drive, is then what you have. At this stage in the game, I think that's really the only way to operate, because we frankly have absolutely no idea what the capitalization, with the financial adequacy of any of these institutions truly is. And hopefully that's going to change through regulation, as we're coming to find out. Sam Bankman-Fried was a massive political donor. I think he was the Democratic Party's number 2 donor, and he was just pouring a huge amount of money into politicians, PACs, and super PACs, so that he could have a voice into the framework of this regulation. And clearly, because he was pouring so much money into it, they were really backing off based on his wishes. And that turned out to be a pretty dysfunctional thing, right? Because he's basically buying his way into avoiding regulation and scrutiny. Now the assets are mostly gone. They're starting to recover some of them piece by piece, but there are going to be a lot of investors that don't ever get their money back, I'm afraid. And this is the result. So, aside from commenting on the fact that I think we need to take the money out of politics like that, that's a really unfortunate result of all this. So, does that mean that it makes sense for you? Well, I think that this should be considered an alternative investment. And if you think back to the financial order of operations that I've talked about a little bit here recently, I think you want to have your basic finances covered. For business owners, that means you need a fully funded emergency fund, both in your household and in your business. I think you want to be maxing out your tax advantaged retirement accounts. I think you need to have all your high interest rate debt paid off. You don't necessarily have to have your mortgage paid off, but I think you definitely want credit cards and probably student loans and auto loans all paid off. And if you have all that done and you're feeling comfortable with the risk that a potential investment goes to zero, a potential investment in cryptocurrency goes to zero, then by all means, dabble. Open an account if you don't have one already. Dump some cash in. Seems like we've hit at least the temporary low based on the charts and what I'm seeing and so forth. There's a lot of upward momentum right now. maybe that turns around. The more we uncover, if there are other substantial frauds that occur, that's going to probably cut the price down by quite a bit and cut the price of all value of all cryptocurrencies down. That being said, this should be viewed as a long-term thing because the merits of it and the investment hypothesis really hasn't changed. This really can um, improve the entire financial system if it's used thoughtfully, or at least the concept of a general ledger is used thoughtfully. And it's a much easier way to transact in general. So it can work, but open the account, make your purchase, and then I would take it offline so you're not taking the risk of having somebody else hold it for you who has no regulatory obligation to keep assets on hand. And if they do, if I, maybe I'm wrong about that. It's possible that they do have some kind of standards I'm unaware of. But it seems to me that if that's the case, then nobody's really been looking at it because we shouldn't be in the situation we are with Sam Bankman-Fried and his organization. Okay, so that's the state of regulation. I still think that this does have merit. I don't own it personally. Yeah, I might in the next year or two. The other interesting point that we should talk about for a moment or two is El Salvador. They made a really interesting move a little over a year ago, whereby they begin to accept Bitcoin as legal tender. So what that means is that if you're El Salvadorian and you owe the federal government taxes for the year, you can pay them in Bitcoin, which was pretty novel, sounded pretty cool. It meant that El Salvador was obtaining Bitcoin, putting it on their federal balance sheets, and taking a lot of investment risk by doing so. So not only did they begin to accept Bitcoin, they began using their home country's currency to buy it on the open market too, so that they would have some if they needed it as a byproduct of all this. So what's happened in the last 12 months? Bitcoin's down like 60%. That's always been a massive risk to them. And here recently, really recently, there was speculation that they might default on debt. Now, the from a macroeconomic standpoint, it would be one thing if the United States decided to accept Bitcoin as legal currency. It would make huge headwaves. It would the U.S. would basically admit that this is a really reasonable thing. It could be considered cash. It would have tax impacts. I think if they're going to accept Bitcoin as legal currency, they could probably no longer tax you on gains in Bitcoin. But it would add a lot of legitimacy to Bitcoin. When El Salvador does it, well, let me back up. If the U.S. were to do that, it would be risky, but not that risky because the U.S. dollar is still the world's reserve currency. When we go out and we borrow money, the federal debt ceiling has been in the news here recently. When we go out and borrow money, we're not doing it in another currency. We're not doing it in euros or Japanese yen or rubles or something like that. We're going and borrowing US dollars from other countries and we're repaying them in US dollars. When you're a different country like El Salvador that has its own currency, when you want to go borrow money, most other countries aren't going to want I don't know what the El Salvadorian currency, what the name is, but the state of El Salvador's economy and country is not one that engenders a lot of confidence in other countries. If you're going to go and borrow money from Saudi Arabia, for example, Saudi Arabia is not going to want your currency. They're going to want US dollars. So there's a huge amount of inflation risk. There's a huge amount of currency risk when you go out and borrow money to finance your own government's operations. Because if the US dollar appreciates relative to your home country's currency and you go out and you borrow 100 million bucks, well, if the value of the dollar doubles against your currency, then you borrowed $1 million or $100 million, but you're going to have to pay back $200 million, which is a huge risk, right? So there was speculation recently. El Salvador had debts of $800 million coming due. 12 months ago, they started accepting Bitcoin as legal currency and purchasing it with their own currency that they had on hand. Right after that, the value got crushed. So a big portion of El Salvador's federal balance sheet went down by 60%, leading to a lot of speculation that they might not be able to repay this $800 million loan. That's a totally different currency. So that's a huge risk. And come to find out, they were able to make the loan payment. What happens if they don't? Well, if they don't make the loan payment, then they default on their debt. And what happens after that? Well, the next time they want to go borrow money from a different country, they're going to say, no way. Or they're going to charge so much in interest to compensate themselves for the risk that it's hugely expensive for El Salvador. So this was a massive gamble by the El Salvadorian leadership, and I don't know whether this guy's title was president or prime minister. I think he's calling himself the president, but he's a young dude, and this seems like a really brash decision. It did at the time, and it's having a big impact now. If Bitcoin doesn't rebound dramatically, they might really have a whole lot of fiscal problems, because this thing can spiral out of control. They can default on all their debt. The government doesn't have money to do anything, and they have to rely on their own countries without having international trade to support the economy. And that's a big deal for any country, but particularly for a smaller one like El Salvador that wants to sell goods and services to other countries to promote prosperity and bring other goods and services in that they can't manufacture and produce themselves. So they're on a slippery slope right now. I hope that it goes well for them, but it seemed like a really poor decision at the time. So hopefully it rebounds. Hopefully they don't have too much exposure. But next 5 years, I'm not optimistic. They're very largely relying on the long-term price of Bitcoin going up dramatically. So that's it for today. If you're in a situation where you have your emergency fund both in the business and personal set up, you have your short-term high interest rate debts paid off both in the business and your personal life. You don't necessarily have to pay off your mortgage, but I would want to max out my retirement accounts before doing this. If you have all that stuff, all those boxes checked, then this could be considered like an alternative investment. It's a big gamble, but hey, if you have all those boxes checked, you're in a position where you can probably take that risk. So view it as a long-term thing. I wouldn't try to trade this or expect to turn it around in a month or two. I would purchase it. I'd take it off any exchange, any platform, put it in cold storage, and then just leave it there indefinitely. Okay. I hope that this made sense. I jumped around a little bit. Apologies for that today. But this is a topic that's getting back in the news, and I felt like it was important to cover. So I hope it was helpful, and I'll talk to you all again soon.
Thanks for tuning in to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Be sure to subscribe to the podcast on iTunes, Google Play, or wherever you digest podcasts to ensure you don't miss out on future episodes and announcements. And feel free to submit questions to growmoneybusiness.com.